Welcome everyone to the seminar. Today we are looking at construction tax. Specifically, we are looking at the VAT domestic reverse charge on construction services, which is going to come into force on the 1st of March. It's presented by myself, Bob Langridge. I'm an associate in the corporate tax team in Brody's, and I specialize, amongst other things, in real estate taxation. And my colleague Isabel Dunverner, who is the director of the corporate tax and incentives team, also a real estate specialist. On the agenda today, first of all, we're going to have a quick update on the VAT treatment of damages and termination payments. For those of you who've been following this, there have been some surprising changes introduced by HMRC. Next, Isabel is going to give a quick overview of the construction industry scheme, because there are some key concepts in that relevant to understanding what the meat of this seminar will be, which is the reverse charge. So first up, this is just a quick update on termination and damages payments or compensation payments. So the reason we're talking about this is that HMRC dropped a bit of a bombshell on the 2nd of September 2020 with their Revenue Customs Brief, RCB 1220. What this brief did was it drastically restricted the revenue's policy on when contractual compensation payments are outside the scope of VAT. Now, they had done this in the context of consumer services such as mobile phone contracts being the most obvious one. However, the way that they had framed this approach had large changes for their policy elsewhere, particularly in real estate and construction. And at the time that this update was published, there was nothing in there on those areas. And so HMRC have had to clarify their thinking quite a bit. Also, another shocker was that HMRC's initial position was that these changes would be retrospective. They would apply retrospectively from the 2nd of September, and they set out an expectation that taxpayers were going to look back 4 years to see whether they had incorrectly not charged VAT on contractual compensation payments, and they were expecting them to correct VAT returns and account for VAT on them. HMRC now have changed their guidance. An update to the RCB was published a few days ago. This slide here just sets out sort of what HMRC were expecting to happen with the retrospectivity. So under the old guidance before September 2020, they were only going to accept that a contractual compensation payment was outside the scope of VAT where a written opinion had been issued saying no VAT was due, or if you had an alternative argument that no VAT was going to be payable. This is a bit of a, or this was a bit of a frustrating position because the existing guidance was so clear that, in my experience, no one ever asked for a written opinion on whether VAT was chargeable. And after the 2nd of September, if a payment was made, HMRC expected VAT to be charged even if they have given a clearance. Thankfully, that is all now done away with. Next slide, please. Since the RCB 1220 was originally published, HMRC came in for fairly heavy criticism from tax specialists and industry bodies. And they have put out an amendment to RCB 1220. However, they haven't yet published the updated guidance which is due to accompany it. They're currently not proactively pursuing anyone for VAT, and the expectation is that they won't, as the implementation of RCB 1220, we understand, has been delayed, potentially till 1st March, although at this point, it might be that it is delayed further. In terms of our predictions then of what we think RCB 1220, when the guidance is updated and published, where we think we'll land is on the next slide, which is first of all, in the real estate sector, lease break payments, it's pretty clear now that payments by a tenant to a landlord will be caught and subject to VAT if the rents are subject to VAT, i.e. if the landlord has validly opted to tax the property. Payment date is going to be crucial for these, so any lease break payments paid after the new guidance takes effect will be potentially subject to VAT, but those paid beforehand are likely to remain outside the scope of VAT. And that'll be the case unless HMRC introduces some form of grandfathering for existing leases or existing settlement agreements. Dilapidations, this has been a tricky one, and HMRC are still considering this. I would make a very hesitant guess that where we will get to is that dilapidations payments won't be caught, as this is one of the areas where the most heavy representations have been made to HMRC. But they have suggested that they might be. So on the 1st of March, we could be living in a world where dilapidations are subject to VAT, but I do think that is unlikely. The next two, liquidated damages and liquidated and ascertained damages. The difference here is the direction these are going in. And my expectation is that liquidated damages paid by an employer to a contractor would be caught by VAT if the underlying contract is caught by VAT. And in some cases, this won't be, for example, if it is a contract for the construction of build-to-rent accommodation. On the other hand, liquidated and ascertained damages, these are normally damages paid from a contractor to an employer. We say here they should remain outside of VAT as pure compensation and direction of payment may be relevant. So this may be subject to some change, actually. The old HMRC position was that liquidated and ascertained damages would not be treated as a price reduction. So if the original contract price was 100 plus VAT, the employer would pay 120 to the contractor. If liquidated and ascertained damages of 20 were paid by the contractor to the employer, this doesn't affect the contract. Where we might end up to, and again, this is a hesitant prediction, is that HMRC accept that this is a reduction in the price. In other words, that liquidated and ascertained damages payment reduces the price to 80 and the VAT to 16. So a small VAT refund would then be due to the employer. Delay payments, again, these are similar to liquidated damages in construction contracts where an employer delays development of a site. The developer is ready to go, and accordingly the developer collects a small compensation payment to account for the delay and the fact that they have had people effectively on site doing nothing. My expectation is that these will be caught, but that is for HMRC to confirm in guidance. Next, I'll hand over to Isabel, who will run us through the CIS.
Good afternoon, everybody. So I'm going to just briefly run through the basics of the CIS. And if we look at the first slide, what is it? It's really a tax deduction system. And if the CIS applies, then the person that's making the payment may have to deduct tax at 20% or at 30% if the person they're paying it to is not registered. But in some situations, people can apply for gross payment status and there's no deduction. There are a lot of administrative requirements around the CIS, so there's lots of returns that have to be done, and there's registration requirements, as we'll see. This tax that's being deducted is set off against PAYE or NIC if the recipient's a company, or the subcontractor's own income tax or NIC liability. So it's a tax deduction system, and then you can get relief for the tax that's been deducted, but there is a lot of administrative stuff around the edges and quite a lot of ways in which it's possible to come a bit unstuck. So just moving on, Who has to operate the CIS? Well, there are two groups of people who have to operate it. The mainstream contractors, whose business includes construction operations, and they have to register under the CIS. And there are also others whose business isn't construction operations, but they actually spend a fair bit of money on construction operations. At the moment, it's £1 million a year on average over the last 3 years, basically. But there's going to be a change from 6th of April, which actually increases that limit. So that'll be a good thing, but it will require more constant monitoring. So they have to register under the CIS if the deemed contractors are caught, and the mainstream contractors will have to. Anyway, moving on, what are the deductions that have to be made? Well, as we've said, it's 20%, 30% or nil. And to some extent, that depends on whether the registration status of the subcontractor. And the contractor has to verify the subcontractor's registration status with HMRC and deduct tax. This all under the CIS applies to labour only, not materials, although there's a change in that regard as well, which is coming up. None of this applies to employees. It's only to the self-employed if you're talking about individuals, but it's up to the contractor to operate the CIS deductions. And obviously it's the contractor who can be in a sticky position if he should operate CIS and doesn't. Okay, on the next slide, the CIS subcontractor, as we've said, can receive payment under deduction. He doesn't have to register, but it can improve the cash flow because obviously you'll get the 20% deduction instead of 30%. And if various turnover tests are met, the subcontractor can apply for gross payment status. And that's certainly worth having, and most mainstream subcontractors in the construction industry will have gross payment status. Moving on to the next slide, we can see that the terminology always causes a bit of an issue in dealing with the CIS, because there is a bit of tension between the CIS terminology and what happens in the real world. So here you can see a fairly standard chain of supplies in relation to a building project with an employer, main contractors, subcontractors, architects and engineers. They are all called those various things in the real world, but in CIS, they are only called contractors and subcontractors. So if we move on to the next slide, you can see that the employer there is a contractor because he is somebody who is paying for construction services, and the main contractor is a CIS subcontractor because he's supplying construction services. And it's as simple as that in the CIS. If you're supplying construction services, you're a subcontractor, and if you're paying for them, you're a contractor. However, if we look further at the main contractor, then we can see that in his relationship with the subcontractor, he is actually a CIS contractor. So he is paying for construction services to the subcontractor who is supplying construction services to him. So the main contractor is both a subcontractor and a contractor for CIS and has to register as both. And that's something that causes confusion and is often missed. Moving on, the construction operations that the CIS applies to are the things you might expect: construction, alteration, demolition, but it includes a whole lot of other things as well. So it'll definitely include most things where you have to wear a hard hat, but it does include some other things where you might not expect it, like internal cleaning if that's part of the construction. Painting of buildings, again. The CIS is UK only, but it can relate to foreign businesses involved in construction operations in the UK and its territorial waters. And of course, it's it's engineering works as well as buildings. It doesn't include consultants though. So they're not going to be within the CIS. Okay, moving on. Some practical CIS issues that we come across are the following. We often come across deemed contractors who don't realise they're deemed contractors and haven't registered. We often come across people thinking that if one company in a group is registered, then that's okay so far as the whole of the group is concerned. We come across situations where, although the business is registered as a contractor, it hasn't realised it has to register as a subcontractor as well. Quite often, CIS issues come up as part of the due diligence exercise when somebody's buying a company. And we've certainly had experience of this where, in point of fact, there wouldn't have actually been any CIS deductions to be made, but the company had failed to register. And in fact, the bank on one occasion refused to lend until the situation had been put right. Although eventually they did agree to wait until after completion. But it can be a really big point because it can be quite clear that somebody should have registered under the CIS, but they haven't. Not appreciating that the CIS applies to a particular situation, so there's an unexpected CIS deduction. Or looking at it at the other end, just failing to deduct altogether. And gross payment status itself can be lost as a result of late returns. So that is a bit of an issue. So one of the situations where a failure to expect the CIS to apply is in the next slide, where it's an agreement for lease. And you might not think that the CIS would apply to these situations involving leases, but it does. So we have a landlord who is paying the tenant for doing works, and the tenant in turn is paying a main contractor. In this situation, the CIS does apply, but the tenant certainly wasn't expecting it, and the tenant's not CIS registered. So the landlord is going to deduct tax at 30% because the tenant as subcontractor isn't CIS registered. And the landlord's going to send that 300,000 to HMRC, which gives a big cash flow issue for the tenant because he's still got to pay £1 million to the main contractor who's actually doing the work. In that situation, you can improve the position by getting the tenant to register under the CIS and even perhaps to get gross payment status. But obviously you need the time to do that. The flip side of that, which often comes up, is that the landlord didn't realise that he was supposed to deduct. So he's paid the whole £1 million to the tenant and then comes along afterwards and says, actually, I'm really sorry, but we didn't realise that we should have deducted. So would you mind giving us 300,000? And obviously that's a matter of the commercial situation between the parties as to whether that's going to be acceptable or not.
And just to jump in and highlight that this actually does happen. One of the transactions I'm dealing with at the moment, I'm acting for a tenant who was paid gross by a landlord when there should have been a CIS deduction. And this is a fantastic opportunity for the tenant to renegotiate the terms of their lease.
Exactly. Because
the landlord is coming to them cap in hand asking for just over £250,000.
Yeah, so it can be quite a shock to the system, but obviously gives the tenant the opportunity to renegotiate. But equally, the tenant is quite likely at the end of the day to agree to hand back the cash, because the tenant can probably recover it against their PAYE or all the rest of it. And at the beginning of a lease, the tenant's maybe not going to want to sour the relationship with the landlord. But as Bob says, it's a good opportunity to renegotiate or whatever it is. There are some exemptions from the CIS which apply if you are doing work on your own property. So in this example, the tenant doesn't have to apply the CIS when he's making payments to his main contractor, because the work's being done on the tenant's own property. But that carve out doesn't apply to the landlord, so it doesn't apply to let property. So it does make it really rather complicated. Okay. Moving on to some changes which are coming in from the 6th of April. There was a consultation last year on tackling CIS abuse, and the idea was to try and tighten up some of the measures. To be honest, there is almost certainly a lot of CIS abuse, but there's also a lot of CIS just people not realizing that they should have applied it type of thing. So not everything is bad. However, these measures are that have come out of the consultation and are coming in from the 6th of April are intended to try and cut down the amount of tax that's apparently disappearing from the system because people have weaved around the requirements and so on. The first one is the deemed contractor registration requirements, but there's also a point about materials deduction, and then some other points on HMRC set-off and the CIS registration penalty. So looking at the deemed contractor registration requirements first on the next slide. At the moment, businesses whose business doesn't include construction operations, but who actually spend money on construction operations, have to register first of all when they get to £1 million over 3 years, and they have to remain registered if they're spending £1 million on average over the last 3 years. But that's done on a kind of accounting year basis. From 6th of April 2021, there's going to be a new test operating in a different way. It's a kind of rolling test, and you have to register as a deemed contractor if you've spent £3 million on construction over the last 12 months. You can deregister if your construction spend falls below 3 million over the past 12 months. So you can deregister at that stage. Obviously, the 3 million over 12 months is a much higher threshold. So that is a good thing, undoubtedly. And it will take out of the picture a lot of the issues that we currently come across. However, there's a monitoring on a monthly basis sort of point that needs to be borne in mind from April. The next slide deals with the cost of materials change. The CIS doesn't apply to materials, only to the labour element of supplies. At the moment, people take that to mean that you can sort of carve out or reduce the amount on which you pay or on which a CIS deduction applies all the way up the chain. So if a subcontractor buys materials, then he's clearly bought them. He makes a supply up to a main contractor. The main contractor makes a supply further up. And a sort of similar materials deduction gets made further up the chain. But from, actually this should say from the 6th of April, sorry people, from the 6th of April, a deduction for materials can only be claimed by the person who directly incurs the cost of those materials. So it's only the party that actually buys the materials that can split the amount that they that the CIS is operated on. So higher up the chain, even though materials form part of the costs effectively, you can't make a deduction, and CIS will apply to the whole lot. And it's also only on the actual cost of materials that you can deduct, not on any markup. So the idea is that if HMRC chose to do so, they'd be able to check the materials deduction against purchase invoices for actual materials. Whereas at the minute, people often use percentages, and this will cause some differences to supply chains going forward. The final changes are just to the, if you move on to the next slide, are to the offset and registration penalties. So there's going to be greater powers for HMRC to change how much people have set off against their real-time information employer payment summaries, or to correct errors. And the final one is that the CIS registration penalty, for supplying false information, is going to be extended to include individuals or companies exercising control over the person making the application. So I'm now going to hand back to Bob to talk about the domestic reverse charge.
Okay, thank you, Isabel. So first of all, I'm just going to quickly run through the basics of the reverse charge that will be coming in from the 1st of March. So the VAT reverse charge at a very high level, it is going to apply to payments for construction services where those payments are reportable under the CIS. That is to say, it is a payment for construction services and the employer is a SIS registered contractor. Unlike the CIS, it will apply to both labor and materials. So there's no ability to separate out the cost of materials and just charge the labor. And it only applies where both the contractor and the subcontractor are VAT registered. If the contractor, i.e. the employer, is not VAT registered, then the subcontractor has to charge VAT in the normal way by issuing a VAT invoice. And if the subcontractor isn't VAT registered, they can't charge VAT. So it is a non-issue. The supplies that are subject to this, the VAT reverse charge, have to be subject ordinarily to VAT at the standard rate of 20% or the reduced rate at 5%. And it cannot apply to end users or intermediaries, which we will cover in a little while, provided they have issued a confirmation that they qualify as an end user. On to the next slide. So this is going back to Isabel's sort of supply chain, how VAT broadly operates at the moment. You have an end client, let's say they're an investor paying a developer to build out a property. So they are paying the developer a total of 170,000 plus VAT, which is 204,000. That developer is responsible for engaging the professional team. So they have an architect at a cost of 40,000 and an engineer at a cost of 30,000 and a main contractor at a cost of 100,000. So all of that £204,000 is accounted for. It is paid out to the developer down the chain. And then that main contractor hires a subcontractor. Again, they are paid 100,000 plus VAT. And at the bottom of the chain, there is a trade supplier selling materials only. So they are entirely outside the scope of the SIS and the reverse charge, and they're paid 50,000. So on all of these payments, normal VAT invoices would be issued by the recipient to the employer, and the employer would would pay the cost and the VAT. On the next slide, we'll see how this changes under the domestic reverse charge. So now our employer becomes an end client or an end user, and assuming they've given the correct notification, the developer charges them VAT in the normal way. Because the architect and the engineer are outside of the CIS as consultants, they are also outside of the reverse charge. So the developer is still paying them 70,000 plus VAT. And when he's paying the main contractor, however, assuming everyone is CIS registered, then the developer is only going to pay 100,000 to the main contractor. He is not going to pay him the VAT. He holds that back and accounts for that to HMRC directly rather than paying it to the main contractor. The main contractor pays 100,000 to the subcontractor, and again, assuming that the main contractor is CIS registered, and he should be, he will account for the VAT under the reverse charge. So rather than paying it to the subcontractor, pay it directly to HMRC, and then the subcontractor will make a normal payment to the trade supplier of £50,000 plus VAT because the materials are outside of the scope. Next slide. This is intended to come in from the 1st of March this year. And as you see from the previous demonstration, the customer will account the HMRC for the VAT and won't pay it on to their supplier. Now, customers can recover the VAT as normal. So if they are in a full VAT recovery position, they can recover all of the amounts that would ordinarily be paid to the subcontractor. For some customers, such as the main contractor in our flowchart, their cash flow should not be affected because while they aren't charging any VAT, they aren't paying out any VAT to their subcontractor either. Next slide. The important thing here is that the supply has to be within the CIS. So for the reverse charge to supply, it's not enough that the employer and or the contractor are CIS registered. It's necessary that the employer is CIS registered, but the supply has to actually be within the CIS. So as we saw with the professional team payments, they are outside of scope. The one exception to that is mixed contracts. So for example, a design and build contract, where we have design and build, the entire content of the contract is deemed to be within the scope of the CIS and the domestic reverse charge. So in our example, the developer is potentially within the scope of the domestic reverse charge if he's not dealing with an end user because he's acting under a design and build contract. Moving on. So this is just a simple slide dealing with the materials position. Don't need to dwell. Of course, this can lead to cash flow issues for subcontractors further down the chain. For example, this subcontractor highlighted here, his cash flow position is going to be affected because while he is only collecting his service fees without VAT, he is still having to pay amounts including VAT out to his trade suppliers who aren't within the reverse charge. Smaller subcontractors do use the VAT they collect to cash flow themselves. So a practical thing that this subcontractor can do is switch from quarterly VAT returns to monthly VAT returns to speed up VAT recovery on the costs for his trade suppliers. Moving on. And here again, you can see that the main contractor and the subcontractor are subject to the reverse charge. So their payments are outside the scope of VAT. And instead of a normal VAT invoice, a reverse charge invoice has to be issued, which we'll come on to shortly. So I want to talk a little bit more just about the kinds of supplies that are affected by the domestic reverse charge. So if we just skip ahead. One practical issue I think that has to be borne in mind is that the domestic reverse charge, because of the breadth of things it can potentially apply to, it's not just going to be an issue in the context of development and build contracts, which is where most of the discussion is taking place. For property owners or landlords, it's also potentially in play for any of the CIS services. So construction, alterations, repairs, importantly, are caught, internal or external painting, installing certain systems, heating, air, and lighting are caught, although security systems are not. So for a property owner, the breadth of things that it could apply to are much wider than just development contracts. However, I think it's equally important with the domestic reverse charge that people are aware that they could fall into a trap of false positives and accidentally try to apply it to certain contracts to which it doesn't apply. So if we just skip ahead. And the important thing here is not to see a service and think, oh my gosh, this is construction, therefore the reverse charge must apply. You still have to go through that process of thinking through the fundamentals. As a property owner, are you a CIS contractor? So are you normally active in the construction industry, or are you a deemed contractor because of your spend on construction services? If you aren't, you don't have an issue with the reverse charge. Secondly, the supply has to be within the construction industry scheme. So if you are an owner-occupier, you may be able to rely on the own premises exemption from the CIS. That's going to be less available for commercial landlords rather than owner-occupiers, because in those cases, the own premises exemption won't apply. The next step is, okay, you've identified a service, you've identified you are in the CIS because you're a deemed contractor or a genuine contractor. Are both you, the customer, and your supplier VAT registered? If not, then you're unlikely to have a domestic reverse charge issue. A good example of this would be a landlord who only lets out residential properties. They won't be able to VAT register, so even though they're potentially within the CIS, there won't be any reverse charge issues. And if you're in doubt, you could always provide an end user notification to the supplier, provided you qualify as an end user. What this will do is, if you are not within the reverse charge, it effectively does nothing. But if you are within the reverse charge, it means that you've got some certainty over the VAT position because you've confirmed that VAT should be charged in the normal way. So the procedure for applying the reverse charge is relatively basic. You know, where the reverse charge applies, you cannot issue a normal VAT invoice. Instead, the supplier issues a reverse charge invoice. The customer doesn't pay the VAT to the supplier, but they retain that VAT and they account for it under their normal VAT returns. Now, I think we're on to, no, we're not. Again, I just want to highlight the point that it's standard and reduced rated supplies to which the reverse charge applies. So again, in some areas such as building houses, where most supplies are zero rated, it is unlikely that the reverse charge will be an issue, and the current treatment of VAT in the supply chain would be maintained. One potentially tricky area is where you're dealing with quasi-residential things, in VAT jargon, relevant residential purpose, such as care homes or retirement accommodation. In these cases, it's only the supply to someone using the property for the relevant residential purpose that can be zero rated. That is normally the end user. Developers or people further down the supply chain are still going to be subject to the reverse charge because their supplies will be standard rated. Next slide, please. The rule about mixed contracts is also baked into the legislation here. And the idea is that unless the reverse chargeable elements of a mixed contract form 5% or less of the services provided, then the whole of the contract is treated as subject to the reverse charge. So in other words, 5% or more, you reverse charge. Everything less than 5%, you can disregard the reverse charge and apply VAT as normal. Now, this time I am going to pass over to Isabel, who's going to talk briefly about end users.
Yeah, so end users, this is a new concept, if we look at the next slide, for this reverse charge thing, and it means the person at the end of the chain. The organisation that's not going to be making any further supplies of construction services, so somebody like a company paying for a new office block, an investor paying for construction of investment property, or local authorities. And if you are an end user and you provide written notification to the supplier, then the normal VAT rules apply rather than these reverse charge rules. And alongside end users, there are intermediaries who, as we can see on the next slide, are organizations which are kind of connected or in the same group or whatever, and sometimes can be landlord or tenant, or part of the same corporate group. And that's because people often split out the different aspects of construction business to different companies in their group. So there are some unusual situations where you can be an intermediary, which we've put on the next slide, which is prospective tenants under an agreement for lease or beneficial owners. But those are perhaps not things that you'll come across all of the time. But if we move on to the next slide, what is the point? What are the issues around end users? Well, if end users give a confirmation that they are an end user, then the reverse charge procedures don't apply. But it's kind of, if the end user doesn't give a confirmation, then the reverse charge procedures do apply. And we've had a question about a situation where there is no developer. The developer and the end client effectively one and the same, such as a local authority. And in that situation, the local authority would be the end user. And so if the local authority gives a confirmation that they are an end user, then the reverse charge wouldn't apply, and the local authority would pay VAT to the main contractor. So it's a question of whether this confirmation has been given or not. And we'll see on the next slide a kind of comparison. If the end client, end user, has given a confirmation, then they are going to pay 170k plus VAT to the developer, and the developer is just going to issue a VAT invoice as normal, and that will give the developer enough money to pay the main contractor and the architect and engineer and so on. But if we look at the comparison on the next slide, where no end user confirmation has been given, the developer is going to have a lot less cash. It'll work out okay in the long run because the developer can recover VAT on the architects and engineers fees, but they will be in a less good cash situation than if they got the end user confirmation from the end client. So we're certainly suggesting that for existing contracts, you get an end user confirmation. If we look at the next slide, the confirmation or the written notification can be on paper or by post, electronically, in an email, in a contract. And that's some wording that is suggested by HMRC. We're an end user. Please issue us with a normal VAT invoice with VAT at the appropriate rate. Will not account for the reverse charge. And so the end user may wish things to carry on as normal, and therefore will issue an end user written notification, but they don't have to. So if you're in the kind of developer or main contractor situation, you might want to make sure that they do. Moving on, who can issue? We think that in the absence of any actual guidance from HMRC, you should probably apply the same sort of rules as for options to tax. So for a company, it's likely to be a company secretary or director. And unless HMRC make it clear that you can do it, somebody in the accounts department can do it. This is what we're suggesting at the moment. So the next point on the next slide.
The point about existing contracts is that when the changes come into effect, there's not going to be any grandfathering. So payments made before 1st of March, normal VAT applies. Payments made after 1st March under an existing contract will be subject to the domestic reverse charge. So you can have situations, and we've certainly encountered situations, where you have to then go and ask your end user for the end user confirmation. This may not have been issued or even in contemplation when the contract was entered into. Or you should enter into a form of minute of agreement with contractors to confirm that the reverse charge arrangements won't apply, and so that VAT won't be paid to them. So if you're a developer, you have one job with the end user, get that end user certificate, and with the contractors, document somehow that you are going to switch the reverse charge procedure for payments processed after the 1st of March. One issue that can arise in these circumstances is if an end user does not want to issue a certificate, it could have a cash flow implication for the developer. And in practice, this is going to be if the developer still has substantial payments to be made to their professional team. If they are paying out large sums still to their consultants, this could be problematic for the developer because those will still have to include VAT. However, if the developer is predominantly now going to be paying, their main contractor for construction services, the reverse charge should apply to that. So the cash flow implications are a lot better, and it is maybe less commercially important to get that end user confirmation. But that's something to bear in mind if you have to go and ask an end user for confirmation where you're dealing with payments under an existing contract. Next slide, please. So invoicing, we have mentioned this sort of tangentially. We can run through quickly because we're very low on time. There is no magic to issuing a domestic reverse charge invoice. If we could just have the next slide, please. You simply have to issue an invoice that includes all the information that would go on a normal VAT invoice, such as the supplies being made, the cost of those supplies, your VAT registration number, and a note saying that the reverse charge applies or that Section 55A of the VAT Act applies, and that customers have to pay the VAT directly to HMRC. So suppliers do need to be sure that their systems can generate these invoices. Next slide. This is just an example of what a reverse charge invoice would look like. You can see here that we have the VAT rate 20% or 5%, but where the VAT amount would normally go in, it simply states that the reverse charge applies. And then at the bottom, in nice bold writing, the customer has to pay the VAT to HMRC at the relevant rate. In terms of compliance and penalties, we understand that HMRC will apply a light touch for the first 6 months, provided they think that you're trying to comply with the new legislation and you've acted in good faith. So it's not a total carte blanche, but where people are trying to implement this and struggling, HMRC should be receptive. Next slide. Finally, we just have a little bit of a few links here to the relevant HMRC guidance. I would recommend checking out the technical guide that's linked to here because that contains useful suppliers and customers flowcharts to help you dealing with the reverse charge. The first question, someone who constructs residential dwellings for housing associations and registered social landlords. Are these deemed end users on the basis that they then tenant the properties on handover? And the answer is really twofold. First of all, yes, they would be deemed end users because they aren't making an onward supply of construction services. Secondly, this isn't likely to be practically important for you, the domestic reverse charge, because where you are constructing dwellings, the VAT zero rate would apply. And the zero rate is outside of the scope of the domestic reverse charge. So you would continue making zero rated supplies to the housing associations and social landlords and receiving zero rated supplies from your subcontractors. The next question also about end users. We are a consultant operating in construction. We may have occasion to use the services of a lift access company to do property inspections for clients. Presumably, because we are effectively the end user, the lift access company would invoice us for their services, excluding VAT, and we would still invoice the end client with the VAT on all cost of hiring the lift access equipment. Would we then account for the reverse charge VAT in our VAT return? So two elements to this. First of all, the consultant company, yes, you would charge a VAT to the end client who employs you in the normal way because your consultancy services will be outside the scope of VAT. Second of all, are you an end user in respect of the lift access company? Yes, I think you would be, because you are not making onward supplies of construction services. So you then have an option to, if you are CIS registered, you have an option to either give an end user notification, and then that would be charged in the normal way, or you withhold that notification and the reverse charge applies and you account for it in your VAT return. But if you are not CIS registered, then you are outside the scope of the domestic reverse charge, and so VAT would be charged in the normal way from the lift access company. Sorry, there's quite a bit in the answer to that, and I hope that makes sense, but do feel free to send me your email address if you'd like to follow up more. Okay. I think that we're going to wrap up there. Contact details for myself and Isabel are on the final slide. We will have the recording edited down and then circulated in due course to all the attendants. But if you have any questions in the meantime that you didn't get the chance to ask, please do just email one of us with them. Thank you.
Thanks a lot.